Welcome to Business Nigeria, where we bring you latest happenings in the world of business across the country. And today's focus is the oil and gas sector. Well, lots of issues around it, the stocks and the oil markets in entirety. I am Tolu Lokpe Ogunjobi. Welcome. Thanks for joining us. Now, OPEC and non-OPEC producers have agreed to lower output by almost $1.8 million per barrel. That's in hopes of reducing oversupply and supporting prices. Industry data suggests that OPEC and other exporters have made progress towards their agreed output reduction of almost 1.8 million barrels during the first half of 2017. Now, let's take a look at the trends of the oil price in the last 2 months.
As at November the 29th, crude oil prices dropped at the world market. This was due to oversupply by major producers. At the London market, the Brent traded at $45 per barrel, while for the OPEC basket crude, its price steadied at $42 per barrel. As at December the 5th, crude oil prices soared to best level in more than a year as OPEC-led bounce resumes. The Brent traded for $55 per barrel in mid-trade, while the OPEC basket crude moved up to $49 per barrel. Meanwhile, the Yuletide did not bring much pressure on global oil prices. Report says that dealers had predicted the direction of the market ahead of the festive season and positioned their bargain tactics, which ensured stable prices. The London Brent kept a downward curve by Christmas Eve, just as the OPEC crude stayed flat at $52 few hours before the celebration of the Yuletide. As at January the 12th, oil prices moved up on Thursday as expectations of a strong demand from China rises as the European Brent traded at $55 per barrel, while the OPEC basket crude price steadied at $52 per barrel. As at yesterday, oil prices rose. It was driven up by a weakening dollar, but gains were capped by plentiful supplies and inventories despite an effort by OPEC and other producers to cut output and prop up the market. Brent crude traded at $55 per barrel, up by 48 cents, while the OPEC basket price steadies at $52 per barrel.
Well, review of the oil performance, that's the oil prices, the performance in the last 2 months. But now let's take a look at what the oil prices are saying today in the international markets. The price remained relatively stable on Friday, as analysts predicted that the United States tax reform could transform global oil market. Well, at the London market, Brent crude trades at $55 per barrel, down by 0.84%. For the OPEC basket price, that is at $52 per barrel. Interesting one there. Now with me in the studio is the head of energy research, EcoBank. Yes, I'm going to start this way. The decision by the OPEC and also non-OPEC to cut supply of crude oil, I think that has actually helped the oil markets and countries like Nigeria. Would you agree with me?
Yes, I would, actually. Because if you think about it, the gap we had in the market before was about 2.1 million barrels per day. That was the gap between supply and demand. Now, what OPEC has agreed to cut, and not just OPEC now, OPEC and some non-OPEC countries, is a total of 1.8 million barrels per day. So that significantly reduces the gap in the market. Now, if you understand the way physical crude actually trades, what happens is that with that cut, there will be countries that now have to quickly start looking for a new source of supply because that cut will affect them. So what would that mean? They will start bidding higher for other cargoes that are in the market, so consequently driving prices up. So that is what is pushing what we're seeing in the market in terms of prices starting to jump up. But what is also moderating on the other side is the dollar, the way the dollar keeps strengthening, weakening. So that ensures that once the dollar strengthens, it becomes more expensive. Once it weakens, it becomes cheaper. So it caps, but it's been good for Nigeria.
It is. And even before I go to, maybe we'll shift away from diversification now when this gets very more interesting. I'm looking at the stock market now. I think the stocks too are getting attractive. Can you give us a brief of what you see?
Exactly. So for instance, if you look at this week, the NSE Oil and Gas Index has actually led throughout this week. It's been positive almost every day since Monday up to even as at today when I was leaving the office, I mean, the market should be about closing now. It was positive as well. So, and what's pushing it? You look at stocks like Oando, you look at stocks like FO, you look at stocks like Seplat, you know, and these are mostly stocks that have a lot of upstream interest. So people feel that, oh, with the higher oil prices and some stability in the Niger Delta, these guys would have good performance. So everybody's bidding to position to be in those stocks. You'd also see that stocks like FO are also in the news. Why? Because, I mean, it's still relatively peaceful in the downstream. There's no scarcity, even though we've seen some signs to some extent, but it's still relatively peaceful. So again, it looks like the price is also still cheap compared to what it could be. So everybody's trying to position for a bargain, you know, and that's pushing all markets.
But many are saying that this increase, yes, talking about the increase in crude globally, that it might also affect our pricing here in Nigeria. Because right now, once the price of crude goes up, it's very clear that maybe the government might have to start paying subsidies again. Because there might be a negative effect one way or the other.
Yes, there is. Because again, it's a trade-off. Because the moment the crude prices go up, now you have to understand it, it's a trade-off. The moment crude prices go up, and as long as production remains stable, we actually have more revenue, which means we get more dollars, which means that the Naira also strengthens. Now, so technically, that should ensure that the exchange rate should go down. And we shouldn't see so much impact on fuel prices. But the problem in Nigeria now is that because of the kind of FX policy we have, which is essentially fixed, okay, we can't translate that higher crude oil price and higher revenue into exchange rates. So consequently, as crude oil prices go up, our fuel price will also have to, the landing cost of fuel prices will go up, and we would have to see higher crude oil prices.
No, it's really worrisome. And we keep saying, as of today, now I have the news that reserves jumped up by about 12%. Again, we are 28.9 billion US dollars as we stand today. For a layman on the street, he would like to understand. Look at this figure I mentioned on the show: $28.9 billion reserves.
What does it mean?
What does it mean? How does it put food on my table?
Good. You see, the thing about the foreign reserves is, how does money get into the foreign reserves? We sell our crude oil. We make money from crude oil and other non-oil sources, and especially from crude oil. Now, because we don't spend dollars in Nigeria, the bulk of that forex stays in our in our bank accounts, and that's what we call as our foreign reserves. It gives the CBN ammunition to defend the Naira. It means that when people actually want to import goods, they actually have a source of dollars through the CBN. Now, the more that money is, the more we can actually finance imports. And it means that, of course, you don't have to expend so much Naira to actually buy dollars so that you can import. Now, how does it affect the layman? As long as we keep having that increase in the foreign reserves and we keep having access to more dollars to import stuff, the price of imported goods should come down, because then it becomes cheaper to buy them because Naira and dollar is more available. Now, the reason why they've gone up recently is because there hasn't been enough dollars in supply. We've had very low reserves, so we've not been able to provide enough dollars for importers, so they had to raise their prices. But that should start to adjust now, and that's how it affects the common man, because then maybe he can afford his DSTV a little bit more, or he can afford his imported chivita or imported products.
You know, I know we're going to go on a break, but before I go on that break, I just remembered the effect also on our budget. It's very important because I think we are on the it's predicated on $42 per barrel.
Yes, it is.
Right.
Yes, it is.
And I think for the exchange rate too,
it's 290, I think. Yes, that's a bit of a sticking point.
After the break, we'll go to this forex thing, which I know you're going to give lots of insight into that too. But how does this also help, address the challenges which we actually face with regards to our budget?
Okay, you see, the thing is, with our budget, there are a couple of issues. The budget is based on certain assumption. Number one is that we're going to have crude oil prices at $42 benchmark, and then we're going to produce at least 2.2 million barrels per day. That's why there's a bit of an issue, because if we don't produce that 2.2 million barrels per day, even though we have a higher oil price, it may not fully compensate for the difference, you know. And that's why the oil minister is doing a lot of legwork, trying to ensure that they settle the issue in the Niger Delta. The VP has gone there last 2 weeks, and then he's going to go back there in February as well, so that if we can get production up to that 2 million barrels per day, with the oil price we have in the market above $50, I think 55 based on what you mentioned, we would have a massive revenue. Then we'll be able to actually finance projects, we'll be able to finance capex. And if government spends, the thing about Nigeria, the way Nigeria works is, until the government spends money, there's no money in the economy. Look, that's how the economy is structured. So when the government doesn't spend, there's very little money to push things, economic activities in the economy, and that's what we need to happen. So if we have that positive scenario where there's stability in the Niger Delta, good oil prices, then we'll be able to have more money in the economy, spend towards construction, spend towards various capex and capital expenditure, and then salaries as well will be paid, and then people can start buying goods. Things would start to improve gradually. But if oil prices start to fall again, it becomes an issue.
This is serious. But I'm really enjoying this conversation, but we need to go on. We have to go on the break. We're going to go on a break, and I'll still have the Lakmore here, giving insights to all of these issues. Stay with us. Now, thank you for staying tuned. You're watching Business Nigeria, and I still have with me in the studio the head energy research of EcoBank PLC. Now, Dolakbo, we looking at the oil and gas sector, which for now we still need the oil receipts to actually run our economy.
Yes,
we've not fully diversified. We really need that. There are lots of challenges with in this sector. You've identified one, the Niger Delta issue, which is one of the most important ones at the moment, because that has to do with production and output, and it's very, very important for us. But now I'm looking at other challenges. The PIBs there are lots of other things that needs to be done in the oil and gas sector to actually make us harness this benefit. I know the oil minister has been all around trying to get funds here and there to execute some projects, some major projects that maybe the federal government can't even fund. What do you make of all of these challenges in the sector? How do you think we can get it right, take our eyes off diversification?
Okay, thank you. Because you see, even diversification, we still have to get the oil and gas sector sorted. Because if we get the oil and gas sector sorted, we can actually get a lot more revenue, which we can then pump into the other sectors that we want to diversify into. For instance, if you want to diversify into agriculture is going to take a long time. But you need to set up infrastructure in place to ensure that agricultural diversification actually works, because storages, commodity exchanges, commodity boards, markets, and all that have to be properly structured. Now, but coming back to your question, the real issue is this. Sorting out the oil and gas sector challenges, the PIB is a very cardinal part of that. Now, what the Senate has done is, look, if we can't pass the PIB as one single document, we can split it into 3 or 4 more documents. The oil and gas, the petroleum ministry actually agrees with that, and they're working on that as well. So now what they've done is there's a gas policy, there's an oil policy, then there's a fiscal policy, which they just released yesterday. That as well, those are breaking it down. Instead of waiting for just one single document that will spell everything out for the entire industry, we have just several documents. So now if that passes through the Senate and gets passed into law, it provides investors with a very clear understanding of how the government wants to relate with the oil and gas industry, how they want to charge taxes and royalty, what sort of regulator will be regulating the industry. Now that clarity will ensure that, and also what fiscal terms. Now, part of what has hindered the oil and gas sector in terms of investment is the clarity around fiscal terms. There were issues around how do we treat gas, what's the fiscal for gas. They weren't very clear. What's the fiscal for deep water? Deep water is where the bulk of our reserves are right now, which are not being explored because nobody has the very clear sense on the fiscal terms. And what we see in the old PIB shows that it's going to be very, very high, and it will discourage investment. So that's why the IOC didn't want to invest. Now, if they start to invest, this will be very good for the oil field service companies. You have a lot of Nigerian companies as well. All the drilling companies, all the marine logistics, all the procurements, all the engineering firms, we have a lot of Nigerian indigenous companies there that have not been able to get business. Why? Because the oil companies are not investing. But if we pass all these policies, we give those clarity around the fiscal terms, they'll start investing, and we expect that to actually start happening this year. I don't know if you heard about the JV cash call exit. Yeah, so with that happen, what that has done is government has told them, look, if you want to get your money, do a new project. Do the new project, and then from the revenues from the new project, we'll pay you.
Yeah, interesting. I think the oil minister is actually taking us to another level. Though there were challenges from the onset to start and all of that. Now let me go to my next question. We trade in dollars even when it has to do with crude, and we know what to face with our FX policy. I was reading along when I was doing my normal studies, and I was able to see that at the moment we run almost 11 different exchange rates. Yes. The pilgrims rates, international cards rates.
The CBN governor will disagree with you.
Oh, okay. There are lots of rates there's a black market rate, there is okay, let me say there are the series of rates which we actually, at least we see it outside. Many people, analysts have confirmed all of this. Yeah. What's wrong with our FX policy? We try to float the Naira at the time. We try to live, I don't know, the demand and supply thing is, which is going to work for us at the moment? Because I'm kind of getting lost in all of this. And we need to attract foreign investments.
Exactly.
If we don't get our forex right, our foreign exchange market
we
right,
can get it. Yeah, very true. And you see, it's a difficult balancing act that the CBN has to do right now. And what's causing it is because we don't have enough, we haven't developed the sectors that could yield us FX. Let's just put this in context. The oil and gas sector is only 10% of Nigeria's GDP. But so in terms of diversification, the Nigerian economy is actually diversified, you know. But in terms of contribution to government revenue, the oil and gas sector contributes almost 80%. Now, what that means, also in terms of FX, the oil and gas sector contributes over 90% of our FX earnings. Now, what that means is all the other sectors, the 90% of the GDP, is generating less than 10% of FX. What that means is that we have not developed those other sectors enough for them to generate enough FX. So consequently, we have a significant shortfall in FX. Now, the shortfall we have in FX also ensures that the CBN has to manage it because we still have our foreign debts to pay for interest payments on our foreign bonds. We also have to make sure that there is enough FX for fuel imports. Now, fuel imports alone are like 35% of our FX supply every week. Then we also have to ensure that we have a stable exchange rate because of electricity tariffs. But on the other hand, because we have that almost fixed exchange rate, at which nobody is really able to access FX, the foreign investors won't come in. Because think about it, if I bring money into Nigeria, part of what I want to do is to make return and get my money back as well. I want to employ people, I want to pay my taxes in Nigeria, I want to, of course, contribute to the economy, but mostly what I want is good returns. And now, there is absolutely almost no other sector that enables you to bring your money to Nigeria and take it out except the oil and gas sector. So, for instance, we believe in the outlook for this year that that's one of the key areas where we are going to see FDI. The oil and gas sector, why? Because if I bring my money to Nigeria, I develop an oil field, I'm going to sell the oil abroad, I'm going to get my dollars abroad, I'm not waiting for CBN to pay me. So, but if I bring my money to do granite factory or tomato paste factory in Nigeria, if I invest in a tomato factory in Nigeria, I develop the tomato, process the tomato, I sell the tomato, I'm going to get my naira in Nigeria to get my dollars out. I have to buy dollars from the CBN. And that's where it becomes a tricky point. So we're going to have to take a decision. Do we want to really attract this FDI and FPI into other sectors, or do we just want to maintain our exchange rate policy, which doesn't allow it? So I think that's the decision the CBN is constantly trying to avoid making.
Lately, just some days back now, the MPC, the Monetary Policy Committee, had their meeting and they retained the MPR at 14%. There's been lots of reactions to this. Even the manufacturers are complaining. I just want to talk briefly on that because you mentioned something very important, outlook for 2017. Yeah. What do you make of that MPR before we look at the outlook?
Well, the interest rates are quite high. For a long time, we've tried to balance, we've given up the chase for growth and we decided to go after attracting the FPIs. And to do that, we were offering them higher interest rates so that with the higher interest rates on treasury bills, we have rates as high as 18.5, 18.6% on treasury bills. We were offering high rates even on bonds. Bond yields for 20-year, 15-year bonds are as high as 17%. In the developed world, before you see 6% yield, you probably have to search around all of Europe and all of North America. But in Nigeria, we're offering yields as high as 17% to attract foreign investors. But still yet they didn't come. So clearly, I think part of what the CBN decided to say is that clearly it hasn't worked. So now they have to either go for growth. And to go for growth means that they're going to have to lower interest rates so that banks can start borrowing to businesses and businesses can invest and the economy can grow. We were not doing that before because we thought we'd get dollars. And when we get the dollars, then there'll be more dollars for the importers and they will still find a way to grow their economy if they have access to dollars. But that wasn't working.
I just pray this works, please. We should be a step in the right direction.
I hope
now,
so.
Now, in all of this now, the outlook for 2017 seems to be bright. Many people are saying there's going to be a growth, there's going to be recovery, there's going to be this, there's going to be that. And you also pointed out now that the oil and gas sector will expect lots and lots of FDIs from that sector.
Yeah.
Let's be light on other sectors. What are our expectations? Agriculture, the government is doing a lot around it, and solid minerals. Don't let us forget that too. Yeah. There are lots of issues. There are lots of stuff going on there that the ministry there. So what should be the outlook? What should we expect for this year? Is there really going to be a growth? Are we expecting to recover?
Okay, let me put it in context. The interesting thing is Nigeria, as a Q3, we are already gone to as low as minus 2.1% GDP growth. Now, I've seen figures talking about the fact that Nigeria could grow by 2.5% in 2017 and the likes. Now, you know what that means is to go from minus 2.1 to 2.5 means you have to grow by at least 4% 4.6%. Now, I don't see where that's going to come from. I think there will be a growth. But that growth will be to take us back to maybe 0.0% or 0.1% or maybe minus 0.1%, but not to take us to 2.5%. What most people are pricing in is the fact that when you're coming from a low base, it's very easy to rise. So everybody thinks, I mean, with that base effect, Nigeria should be returning a good growth. But I think we're still going to grow, but we're not going to fully recover from the recession in 2017. We're going to see investments in oil and gas. We're likely going to see investment in other sectors, but it's going to be limited. Why? Because of the FX policy, until that changes.
Infrastructure?
Because, again, those segments need infrastructure development. If you're going to develop agric the way agric should be developed, unless you want to just give money to farmers to go and be doing small subsistence farming, you need infrastructure. Farmers have to have tractors, they have to have storage, they have to have markets, they have to have good roads so that they can move from farm to the market and from market to where it's going to be processed and all that.
Dolakwa, I must thank you so much for your time.
Thanks for having me.
Energy Research, EcoBank. Thank you very much for joining us on Business Nigeria. Yeah. Well, I know you can go on and on. Well, away from that now, let's look at the Nigeria equities market, which closed the week on a positive note as the Nigerian Stock Exchange All-Share Index advanced by 0.08% to settle the year-to-date return at minus 1.15%. In the banking sector, Sterling Bank led the pack of advancers with 2.67% at a close of 0.77 kobo, and Guarantee Trust Bank topped the losers log with 0.61% at a close of at 24.35 kobo, while EcoBank, United Bank of Africa, Union Bank, and Wema Bank remains unchanged. At the close of trade today, the general market sentiment revealed that the number of losers outweighed the number of losers at the ratio of 2-to-1 by the close of market today, while Total led the pack of advancers, while International Breweries PLC led the pack of decliners. Champion Breweries PLC was the most active on the chart of the top 5 movers with 83.79 million worth of contribution in volume. And last on the chart is Diamond Bank PLC with 7.86 million worth of contribution in volume. While Union Bank Nigeria PLC emerged as the highest dividend yield equity with Oando PLC and Cornell PLC also making the list. Finally, the international scene, dollar rose against major African currencies while it remains unchanged against the Nigerian currency. Well, that's our package for you today on Business Nigeria. Join us again another time for more insightful analysis and topical issues. I am Tolulope Ogunjobi. I leave you with the figures of the exchange rates as it stands today. On behalf of the entire production crew, thank you for watching.